Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we have a special Friday morning broadcast. As you can see, I am joined by John Lee of Silver Elephant. John, good to see you on here. I know you've had an interesting week and you have some news, although first of all, how are you, my friend?
I'm doing well, Chris. TGIF, you can see I'm in my casual Friday outfits. And indeed, we do have some very exciting news to share, and it just crossed the tape.
Well, I appreciate that because obviously a lot of people woke up today, saw the silver price clobbered again,
Yes.
rebounding a little bit. But as that happens, I will pull up the news here and perhaps you can walk people through the new deal you have where you acquired a nickel project.
Well, you know what, Chris, if you don't mind, go back to the silver chart. I think it's good to provide a better recap because I do follow your audience and we appreciate the exposure that you provided to myself and to Silver Elephant. And there's 50 comments or maybe even more every time I do a video. And it's been just over a month. And recall, Chris, the last couple of times we talked, I had mentioned now is not to be a hero and not to go all in, and that the dollar is made this attempt to break down below eight. It reached almost our 88 target, and I think it briefly touched 89. And that silver at the time was 27 and a half. So I would say, hey, look, if silver is if the best that the silver can muster is 27 and a half at 89 at 89 Dixie, then this is not the time to put all the chips on the table. Subsequently, as you know, Chris, there's been a couple of attempts for silver to take out the 27 and a half level for whatever reason. It could be the cabal, it could be technical, it could be whatever reason. So it was not able to overcome that. And now you're looking at a dollar that's in a bit of a consolidation pattern, which means that there's got to be really very strong catalyst. Something unforeseen, something that's not already being out in the market to really take the silver price past 27 and a half, especially with a dollar that may have additional room to levitate up. So I think my stance on the silver, especially in the first quarter of this year, as I've always been since November and October, which is it's going to be meandering around 23 to 27 and a half. And I would just say, hey, look, the time to put all chips on the table is the safest sense actually when silver surpassed 27 and a half and 28 for one full week, right? Not like on Monday morning or like on a Friday morning. And so I think with that backdrop, as I said, now it's a bit difficult to tell what the future is on hold for silver, especially also given that the silver could gold to silver ratio is around 70, and that is a historic norm average. So that shows me there's not a lot of froth in the market, but neither is there any fear in the market either. So we're a bit of a treading water, bit of a scenario, and so I thought, look, and one more thing, Chris, while just listening is. As you guys know, a lot of people follow me, is hundreds of people, is, I packed a silver price target of $32 by the end of last year. It was almost there. Again, there's so many attempts to break out of it, 2028. It was just never muster enough to get through. And then if you do analyze what happened, we were right about the Dixie getting to 88. We're right about the equity market being buoyant. And these are very conducive parameters and conditions for silver to make a breakout, but silver didn't. So it's a little bit discouraging to say the least. But in the end, Chris, in the end, when you have these invisible hands that are your backdrop and playing against you, it's difficult to forecast. So therefore, outside of January 23, as I'm here with you, I don't really have a crystal ball into I think what will happen in the silver market. I think it's going to be around 23 to 28 in the first quarter, especially also the equity is really looking quite stretched. And if there's a severe correction in the equity market, that's going to further bolster the dollar, and that's going to have a bearish implication for silver. So all in all, I think we're going to have maybe a bit of a banal Q1 for silver. And that actually sort of lends itself a bit of into what we're looking at the nickel for both the medium term and the long term, Chris.
Yeah, well, I think what you're
What's
saying.
your take on silver?
Well, I actually wonder if we're not going to see some action in our near future. Interesting here today. I mean, here we were last night, but still, even what happened this morning, we've seen that repeatedly, where for years it would take months for this to occur, and here we see it 2 days in a row. You talked about requiring some driver for silver, and I think that makes sense. Although I think we got the driver this week, and its name is the Biden administration. I mean, it's a little game people can play along at home. Is just pull up CNBC, and you're guaranteed to see something that's going to cost the dollar a lot of purchasing power of the fraction it has left. Here, Janet Yellen nomination, as it's a great that she's the first female Treasury Secretary. It's pretty scary from a monetary.
Yeah, I mean, Chris, you're looking at fundamentals, right? You have fundamentals on a lot of different fronts. I think Yellen's news is nothing new. If you look at the betting odds, Biden's nomination is being priced in 99% for already weeks. So I mean, there's not anything new about what the path is. In fact, I think under Biden's administration, there's going to be more volatilities, which may be good for gold, but not so good for silver. As I mentioned, silver is a greed trade, whereas gold is a fear trade. I mean, recall, right, Chris? Trump is very active in monitoring the stock market, and every time there's a bit of a downturn in the market, 2%, I'll bet for SPX, the Powells and the Larry Kudlows and the Mnuchins are out being the cheerleaders. I don't think that under Biden's is going to be as much sort of a supportive in the equity market on a day-to-day basis. But I could be staying corrected. I'm just saying that all the fundamentals being priced in. Not to mention that the other currencies also had a very major run, like the Aussie dollars, the euros, and Italy has issues about debt blowing up in Portugal as well. And relatively speaking, U.S. is still the strongest economy. So I think you can go a lot of fundamentals on either way. In the end, you got to see the technical, and the technicals are saying that silver is struggling right now to overcome 27.5. And until it does, there's going to be a lot of conjectures and a lot of posturing on both sides, the bulls and the bear.
Yeah, I think that makes enough sense. And I guess just to me, I just think that the stuff we're going to see is going to be so wild that would be what will, I mean, look at this op-ed, forgiving student debt will help seniors. I actually saw there was an article where it's apparently the Fed is somehow fighting racial inequality and climate change. I'm like, so now they're going to use quantitative easing to solve those two. I just think that even despite what we've seen, it's just going to continue becoming so obvious. Yet that aside, here's a technical one that I was stunned by this week. These are the daily inflows into SLV and the Silver Trust. And to put that 20 burger the other day in perspective, I mean, that's kind of historic territory. Here's looking 2 years back. You see, now we had a lot of these spikes over the past year, but we'll see what it means. But and the manipulation is going to be. I can't say there won't be a dollar move down this afternoon or next Tuesday. In fact, actually, we have options expiration next Tuesday.
Yeah.
So watch
Chris,
out on
couple of things I've mentioned in my Twitter. You can Google me on John Lee Silver Elephant. Couple of observations I want to share with you. I try to look at things that are not spotted by the market, and now you cannot read off the headlines. So first of all, I mean, look at the ETF holdings in silver that's going up, right? I don't think there's not really a lot of dispute or questions about the commercials are commingling, taking the gold out of Bank of England's vault in HSBC and shorting it with GLD and doing sort of nefarious business in managing the gold price. So the more silver that's in the ETF might not serve as a good purpose. I mean, that's a free reign for the cabals to manage their operations, Chris. So not necessarily a good sign in the regard that it just provided more ammos for the commercials to borrow the silver from the vault to manage the silver price. Secondly, an observation as I shared with you since November the 3rd, there's very active managing the market to make sure that the market resemble some sort of normalcy. So there's been very the SPX, the general equity market, has been almost close high miraculously, even on a Friday with huge volume. That has disappeared. So there's been a bit more freelancing by the market. There's a bit more less control of whoever that's managing the equity market. So that and also it has been exhibited in the Bitcoins as well somewhat. So again, that is not, it doesn't, that those signals are not bearing well if there is a correction in the midterm of any significance. And then third, Chris, I don't know if you're aware that Biden sent some already troops incursion into Iraq. Again, any geopolitics is good for gold in the short term, and for silver even in a sort of even a briefer window. But when stuff hit the fans, the first guys to go is silver, because it is a very nimble market. It really is a greed trade. When there's fear, people run for the hill. So there are some oranging alerts and yellow signs that I think investors got to pay attention. If you pull out like 1 year charting silver, you can also see that, I mean, it's a very clear consolidation pattern. And with the big takeouts, lag downs, you can attribute that to whatever reason, but technically the fact that silver couldn't sort of overcome those to establish higher highs is a bad element. So, I'm a bit neutral. Like I said, I can set your bullish case. I can set the bearish case. I would just say, again, now it's not time to go all in. You want to do that when silver is decisively taken out 28 for an entire week. However, if you're half position like I am in bullions in some futures, if silver were to spike down to say 22 or 23, you want to make sure you have these reserves. First, to keep your current position, but secondly, to double up. Because as you said, the fundamentals couldn't be more bullish, right? But you're just going to manage the volatilities. You see that volatility extremes are really showing to its full fruition, and they're not going to go away, especially given that equity market is going to have volatilities. And commodity markets had a huge run up. They're going to have volatilities. There's some correlation also between oil and silver, and oil is long stretched already from negative to $53, despite half the world's locked down. It's got nothing to do with fundamentals, Chris. Let's be real about it. So if there's any retreat in speculative capital, silver is going to also have to take a suffering. So I think I'm just saying that the sign, things are not as rosy as it was maybe say in September. That was really the run up you need, right? We have a certainty of the election, you have money printing, you have all those things happening, but it just it was a little bit disheartening to see that silver didn't take out that $30 benchmark.
Yeah, I think everything you said makes sense. Although fortunately, the one thing that I think any sane person, I don't know, maybe I'm completely lost it, but either really right or really wrong. And I think there's general agreement. One thing that is probably not going to happen anytime soon is the Fed's balance sheet coming down, which obviously is affecting the entire commodity curve. And so on days like today, where we do see silver and other assets down, again, while we don't know what's going to happen next week or next month, for me and other folks out there who are taking a long-term approach, and just as your business generates income and you have investable funds, I know you did have a deal that you did today. Can you walk folks through that and explain some of the exposure that they're going to get on that one?
Yeah, you know what, Chris? We are a silver bug. There's one other interesting observation I want to share with your audience. And that is a lot of prominent managers talked about price discoveries being lost, right? It was lost in the treasury market. It was lost in the corporate bond market. It was lost in the equity market. And now it's almost lost in the commodity market, especially gold and silver, which is managed in the opposite direction from the equity market and the treasury market. That's been going on for a long time. And the evidence of plunge protection team had been ongoing for years, since even before 2009. However, I would just say that something that Trump did, which was which was shifting a lot of the independence of the Fed. Not like it was ever really independent, but there's a lot of the powers were taken away from the Fed, and that goes into the U.S. Treasury Department. So it used to be, because the Fed couldn't do any open market operations on private assets like corporate ETFs or eventually SPX equity ETFs. However, Treasury is in a position to do that. There is no mandate for the Treasury to say bail out some private entities. However, what is happening now, it hasn't happened before until this financial crisis pandemic, is the Treasury now can borrow a limited quantity of money without oversight from the without debt ceiling, without the budgeting from the congressional approval to conduct market operations. So eventually you have basically abundance of, and like all the other three branches, legislative, judicial, and executive, and now with the financial side of it. So I'm just saying that the other side of the trade, the shorts for the gold and silver, has even more capabilities and less oversight to do what they want to do. So I think something also keep in mind. And as you know, I mean, if you're going to bet against the house that has a limited amount of chips, you got to be sort of, they could have a cash call. So you just got to make sure that you're well prepared. And this is where the technical trends really, really come into play. And also it goes into that when silver does take out $28 for a week, that I think the breakout will be emphatic. You don't want to take that your 10% profit and try to time your market. But in the interim, it's going to be 23 to 27.5. That is my call for Q1, unless something completely unexpected happen, and then we will assess the situation then on how the market reacts. Chris.
Sounds good. Fair enough. And will be fun to see how it plays out.
Yeah.
And I'm going to pull our headline back up.
Yes.
To walk us through this one.
Yes. Well, Chris, I've been, Elephant has raised $9 million with the support of prominent bankers, and we're sitting at over $8 million, and we're drilling. We have good success. We put out a couple of news releases yesterday. Our ground crew is tremendous, and we're going to have some really, hopefully, promising results in the very near term. So the question is, why would Elephant go out on a limb to make an acquisition outside of the silver space? And while we're sitting in a very good position, right? This project, Chris, I've looked at for a long time, for over 10 years. It's what I believe is arguably the best greenfield open pit designed nickel sulfide project in Canada, and by extension in United States. Minnesota has some assets, but it's very difficult to permit. And the reason for nickel is this electric vehicle, is this advent of electric vehicle revolution you're looking at. So Chris, if you don't mind, scroll down a little bit. There is a couple of quotes that we put together right here. Yes. Well, I think the Minago acquisition, Chris, instantly propels Elephant to the forefront of the nickel sulfide mining space, of which, if you think that the silver junior space is minuscule, there's only maybe 5 nickel sulfide juniors in all of Canada. And all of them has tripled since Elon Musk in July publicly said that if you can mine silver, I'll give you a big fat contract if you can mine it responsibly, environmentally friendly, and efficiently. And there's, I think the couple of complaints from the current EV owners are they want longer range, so don't have that range anxiety. They want a faster acceleration, and they want to be able to charge their batteries quickly, not over 2 hours, but in 30 minutes. And that batteries technology had advanced so much in the last 5 years, where the cost of lithium batteries gone from $500 kilowatt hour to less than 100, Chris. And the trend is going to continue. So I don't think there's any arguments or any sort of on what that EV is the future. And I mentioned that over 20 countries have stated the intention to ban ICE internal combustion engines between today to 2040. That includes some of the world's largest economy: China, Germany, France, UK, California, India. Right. So there is, and right now the current nickel production is 5 billion pounds. And if there is a 20% EV penetration by 2030, I think it's a very conservative estimate. You're looking at requiring of 1 billion pounds of nickel. They're just not. Chris, That amount does not exist. So, nickel production is on the decline because sulfides are hard to find, and laterite has gone through a lot of environmental issues and never really performed up to standards from Indonesia and from Caledonia and from Madagascar. So you're looking at a structural deficit that cannot be overcome in the next 10 years, where the EVs are growing and they need more nickel, and there's more EVs on the road and costs going down. And on the supply side, there's just no nickel in the market coming into the market in the next 10 years. And it's going to take a lot more capex and permitting to get a nickel mine going. And there's just not a lot of nickel deposits out there, not to mention with the pandemic and Biden's Green Deal, everybody's anti-mining. So with all this, I see a perfect storm heading in our way for nickel. I'm a big car guy, as you know, Chris. I had a couple of conversations. I am a big muscle car guy. I got a Mercedes 612 cylinders that is 7 miles a gallon. I have another NSX. So I'm a big car guy, but it's inevitable. And you gotta stay with the physics. You gotta stay with what's coming. And we thought that this is just an excellent acquisition. In that the permitting status, the project is fully permitted. And that it has 500 million pounds of nickel, could potentially get up to 1 billion pounds. And if nickel right now is at $8, and go to the end of the chart of this presentation, nickel chart, $8 at 500 million, that's 4 billion. But if nickel were to go to $20, you're looking at $20 billion of metals, $20 billion, Chris, at $20 nickel to billion pounds. This chart looks very solid. It's broken out of a 10-year high, Chris. And it's just broken out. And in fact, even on a down day in the equity market, in the mining space, all the nickel juniors are up today. Obviously, Chris, just on a closing note, then we can open for Q&A. Every market, especially commodities, has its own quirks and features, right? Chris, for the gold market, you have the cabals and the commercials, and the silver market, you have this dynamics between industrial and investment. I think for nickel, the wild card has always been the laterite production, but the laterite production is high pressure, heap leach, acid. It just never had sort of fulfill its promise, and that's why the last 10 years nickel is going through a bear market. And now nobody really wants to do anything with the laterite, and sulfides being declined. And that just a lot of supplies being chewed up in the last 10 years. And now you've got this sort of wild card that come out of the blue in the EVs. And I think it's going to completely dominate the demand for nickel, of which there's no substitute like cobalt. It's being phased out. The nickel has gone from 111 to 611 to 811 cathode, and that's 80% nickel, 10% manganese, and 10% cobalt. So we see that structural demand continues. We see supply stagnant. We see demand on a double-digit growth on an annual basis, and we don't see any nickel coming on stream. I think it is incredible diversification as opposed to copper, for example. If you're going to play copper in the EV space, there's more copper going to EV for sure, but annual production of copper is 50 billion pounds, right? It will play less than 5% of the copper supply. Whereas nickel, the billion nickel, you're going to take a big chunk out of the market. And not to mention industrial side of nickel used for stainless steel, use some of the alloys, high tech. So it has its own application besides EV. So I thought it's wonderful compliments. And there's a bit of confusion in the market as to like, what is our identity? However, we very strongly believe the entire board is ecstatic that a bit of confusion, once it's got out of the way, people is going to come to really appreciate what this sort of wonderful asset that we have acquired, Chris.
Yeah, and so what percentage of the overall portfolio does this deal represent, John?
Of the elephant portfolio?
Yeah.
Well, like if you look at our header right now on our homepage, we sort of tweaked our mission statement a bit that we are a energy metals company, and silver is used for solar. As you know, we have vanadium that's used for grid scale utility batteries, and we have clearly nickel for car batteries. Today, I could tell you, Chris, we have 120 million ounces of silver. We're drilling on 2 properties. We're going to add a lot more silver before the end of the year. We're looking at our target of 300 million ounces. On the vanadium side, we did an acquisition in September last year in Nevada. That's the most advanced vanadium project in all of USA. And that's got about 400 million pounds, of which we think we can get up to over 600 million pounds of vanadium. And then on the nickel side, the project has 750 million pounds of nickel already in Minago. And of that, we know there's at least another 400 million pounds that's being drilled, but the resource estimate was never prepared. So eventually you can look at really quite of a beast for elephant of hundreds of million pounds of vanadium, up to billion pounds of nickel, and hundreds of million ounces of silver. And the way, sort of interesting way to look at how we're doing this, Chris, we're literally basically maybe you can think of it using the silver in the ground as a currency, Chris, to acquire metals of the future, right? So we're not talking about sort of dying breed, saying lead, or even to some extent uranium, as there's more uranium plants are decommissioned than being created. And so we're looking at metals of the future, and we're almost like using silver, looking at silver as a currency in the ground to leverage those and to purchase those assets. So we're going to continue to increase our silver resource. We're probably not going to mine it, certainly not at these prices. And then we're going to take that as a currency and make some really surgical strategic acquisitions. We've had a couple of discussions and with investment bankers. They are very on board, Chris. And I think we're going to have a very strong institutional support, not only for the silver assets we have, which we've demonstrated, but for the nickel asset and just for the premise of Elephant evolving into an energy metals company that provides leverage, exploration focused, adding resources, metals in the ground, just providing that low risk leverage to guys that are looking for metals. They're on
Federal Reserve Insurance.
Oh, yes. Exactly.
Make a great bumper sticker.
Absolutely. I mean, Chris, if you look at, I watched this interesting video. If you look at some of the top 10 wealthiest people right now in the world, or top 20, let's say, gone are the days of real estate. They're done, Chris. And gone are the ways of oil barons. They're gone. They're all brands, LVMA, and you have all the Amazons and whatnot. And I think that you got to trend with the future, and it's these futuristic metals, not necessarily palladium or even platinum, because the fossil fuels are gone, but nickel is proven and demonstrated. And I think that the proof is in the pudding is broken out of 10-year high, and I think we're just and you're not gonna have the commercials stepping into the nickel market. But then at the same time, if you look at cobalt, 2017, when it's $10 a pound, and you have these spec hedge funds, right, that got a warehouse and started hoarding cobalt, and in 18 months, cobalt went from 10 to 45, Chris. So I think that nickel is in the exact inflection point, as people are waking up, literally digesting the news from Elon since July, of which nickel has gone up 20%, and nickel juniors tripled. And I think this momentum is going to carry on. I don't think anything's going to stop it, because there's no supply, and demand is going to continue. And once you have the spec hedges that come in, open a couple of warehouses and take the LME inventories out of the equation, you can see incredibly explosive action, Chris.
Well, I think we're headed to some truly stunning financial events in our future, as all these things, then you get the Fed leverage piled on top. And I'm going to go to the comments here. John Real G Wiz says, loves that the CEOs, at least in this industry, make themselves available to do this and take questions. I have a question from Adam G, and while we cover that, write in any other questions you may have. Adam G says, how much silver and nickel does each electric car use? John, any idea on that?
Yes. I don't know so much about silver, but every electric car, the fundamentals are very easy to understand. Every electric car requires 30 kilos of nickel, 30. and that would be about just under 70 pounds of nickel. And Chris, today's EV penetration is around 5%, and an annual production of cars, all in general, is about 100, Chris. So that just say in 2030, that EV's penetration will be 20%. Okay, I think that's quite conservative. I mean, 5 years ago, I don't see a Tesla. Now they're everywhere, even in Taiwan. So that means 20 million cars, right? You follow me, Chris? The 20 million cars at 60 pounds, just say 60 pounds, a car, that's 1.2 billion pounds of nickel. 1.2, okay? Today's global nickel production is 5. So if you divide 1.2 by 5, that's 20%. And there's no nickel production is declining and it's price inelastic, Chris. So let us say you have somebody throw a curveball in the market, and they're going to need more nickel because they want a higher intensity, they want higher range, they want faster recharge. And this is not just Elon Musk. This is Porsche, Volkswagen, all the Japanese and Indian outfits. And this is not just cars. Like, for example, in Taiwan, I don't own a car anymore. I have an electric scooter because I don't go any outside of my 3-kilometer radius. Oh, it's perfect. I don't have to park it. I will just fold it. I carry it with me, right? So, and then you look at, if you look at the future, there's air taxis. That's another example. So all those are batteries. And then you have trucks, boats, even some of the air auxiliary supplies from airplanes. All those things they need nickel. And that's why the subsidiary company that we created outside of Silver Elephant, the name is Flying Nickel Mining Corp, because we eventually see nickel in space, and nickel is a strengthening agent as well, anti-corrosive. But all in all, to answer your question is, it's 30 kilos or 60 pounds, and the world's going to need at least 1 billion pounds more nickel by 2030, if not 2 billion pounds on the aggressive end, just for cars, not the other things, boats, flights, UFOs, whatever you call it, and scooters, bicycles, and it's just it's incredibly promising. I mean, I could barely sleep in the last 2 months trying to execute this deal to the finishing line, and we couldn't be more ecstatic, Chris. This is easily the most promising acquisition the company's ever made. In this space, I think it's going to be absolutely explosive. There's only 5 or 4 juniors in the market, all of publicly traded space in North America. Other questions?
Yeah, and I know you were excited about that. So again, congratulations, John. I'm happy to see the news. We have a question from Anthony here. John, what type of skill set do you see as lacking in the mining sector ahead of the coming mining and commodity boom?
Yes, Chris, I give it a lot of thought into that because I've been around for 15 years. Mining is really dissected into 2 critical areas. There's exploration, and then there's production, and there's also the construction. So if you look at the three quadrants, well, there's triangles. So something like Keith Neumeyer, which is incredible because he does marketing well, and he does exploration, and he can put a mine to production. But not many companies have those skill set and the scalability to do that. So I would say exploration, you have a lot of new breed that's coming on. So you're going to need a lot more exploration talents, qualified geologists like Great Bear of Chris Taylor, whom I know 10 years ago when he was just come out of the market. We were sharing the same office. So I think we're going to need a lot of geologists, but fortunately, there's a lot of technologies nowadays with the deeper penetration of polarization max surveys and 3D modeling can help a lot with artificial intelligence. And on the construction side, technology also helps, but I think it's in the mine management side, we're going to need some talents because nobody's waking up today and say, I want to be a super mine attendant, right? Or I want to be a mill plant manager. So I think in managing a mining operation requires quite a lot of, I think there is a gap to be filled. And also in underground mining operations, that's why a lot of the underground minings are really not popular anymore because the cost of an underground miner, including benefits and time off, could be up to $150,000 a year. Just nobody wants to get into that business. So I think a lot of the guys are budgeted for like 30 or 40, 50,000. And that's one of the key advantages working in Bolivia, because their wage is around not even 1/10, 5% of what the US counterpart equivalent. So I would say all in all, technology helps alleviate some of the shortcomings on the exploration front and the construction front in design. But I think on the operational front and on the managing of a mine, there's a lot of to be desired. And that's why you see a lot of the mines are behind schedule, mismanaged, and these teething issues. I think they're going to get worse before they get better, because nobody is choosing to be in a career of spending times on the field without the ability to access their iPhone, Twitter every 5 minutes. And so that's the problem.
Sounds great. I'm going to, that's the career path. But I mean, I know what you mean. It's actually interesting. I was reading yesterday, this book mentioned that the companies get 250 times more applications for entry-level positions than for higher level that requires management and leadership. And I would just say, I know there's a lot of people that, whether it's corporate America changing or something that happened with COVID, and if you're sitting here listening to this type of precious metals, I mean, you're getting an education. That's what I like. A lot of the mining is new to me, but every night I get to sit here and listen. And, maybe you were a manager in some completely different industry, but those skills are needed. And certainly, again, while it's not maybe the way I would have chosen to do it.
Follow your heart. Do what you're passionate about and be good at it. There's a ton of resources. Follow the guys that are successful at it. Just do a Google and YouTube. Just follow your passion and follow your heart. Don't go into accounting. Don't go into engineering like my parents told me. I mean, these are, the past, because with the mobile environment, you can get an accountant cheaper than probably you can get somebody who is fixing cars.
Yeah. John, we do have a question here from Gordon Gecko, who says silver, nickel, vanadium, which is it? And perhaps, I know you did mention that earlier, but you could just reiterate and I'll pull up your homepage again, where it does have that you're acquiring a few metals there and resources, and perhaps you could touch on that one more time.
Yes. Well, Chris, we see silver as a currency, of which we're going to continue to develop our resources in the ground and other acquisitions, of which we think that we can pay pennies on the dollar to acquire acquisition per ounce basis. So we're always going to be on the lookout for adding silver ounces. We see that as a currency. We see that as wealth. And we're not going to put those mines into production and risk the production construction risk and having to recruit entirely different set of talents like we talked about in the near term, unless silver goes to $50 or more. The vanadium was a bit of a legacy asset, but we see vanadium as the metal of the future. Robert Freeland talked about vanadium being the miracle metal because it's good for grid scale utility batteries, and also make the metals lighter and stronger for aerospace. And then for nickel is for batteries. However, Chris, we're not there to acquire disjointed assets in nickel and vanadium and hoard them. That was not. These assets are big, massive assets, standalone bases. They're monolithic, Chris. So we're not in the near future looking to acquire additional strategic assets out there. And this is really one-off I have to look at for 10 years. And this has the potential to get to £1 billion or more, of which would be kind of unparalleled in terms of the grade and the recoveries for this project. This project grades 0.5 nickel. That's equivalent to 1.5% copper open pit. Nobody else can boast that kind of numbers in the junior space. So, and same for vanadium, we are in control of arguably the largest primary vanadium belt in North America on a permitting stage. So we're not out there, Chris, to looking at acquiring another greenfield vanadium asset in the Yukon, right? Or another nickel underground in Newfoundland per se. But we're going to be on the lookout for silver assets to get to our targets. Hopefully answers the question. These assets are, on the other thing, also very advanced. So we're not going to spend a lot of money on drilling nickel, permitting nickel, neither with vanadium. They're just there, as you said. Okay. They're goods. They're goods. They're a brand.
Yeah. And I mean, again, I know every investor has their own things that they're hunting for, although mean, most silver stocks, there's none that are 100% silver just because of the way the minerals come out of the ground. And, I mean, just in the same way that it can be good to have a diversified portfolio if the assets match what someone's looking for. And anyway,
Exactly.
John.
Yep. Other questions?
Well, I did have another question because I know you had a couple other announcements this week, which we touched on briefly on the show last night. But
absolutely. Yes.
You could walk us through and give us an update on this.
Yes, if you could scroll down to the bottom, there should be a map. And Chris, I just want to say, if you look at the charts of some of the, there you go. If you click on the, there's a photo, right? Anna, go up in the middle. There's a photo. I know if you click on that.
This one?
Yeah. So I think, Chris, a lot of the junior companies are really very toppy, and had a bit of a big correction. So typically, you're not going to see this kind of correction to go right back to top. So that's another sign that we're going to be in consolidation pattern. Chris, secondly, I'm just observing a lot of robbing Peter to pay Paul. It's not like a lot of new infusion of capital into the mining junior space in silver. So I'm just thinking we're going to need some really big catalyst that's out of the blue to get that new money coming in. Right now, I just see a lot of robbing Peter to pay Paul. So this is our first news on Pulo. In the red area is the Pulo deposit. That's where the existing resource estimate. And what we found is we noticed that the belt is actually shifted downward to the south in the northeast. So we've been doing a lot of work in the area. We drill 4 holes. They're in the lab. And Chris, I would just say this: we try to be very conservative, and we don't want to announce a drill campaign without really any sort of results to show for. And we try to be under promise and over deliver. So I would say that now when you see Elephant announce a drilling program, you will really confident in saying that we probably have something in the hat that we can pull out, a bit of a rabbit or an elephant or a whale. So you can see, but I think key here is Christmas in January, we've been doing nonstop, a ton of work. Okay. So the other news release, Chris, if you don't mind. So this is the Elephant project, of which Elephant acquired is the flagship project, of which has the resource 120 million ounces and 2.2 billion pounds of lead and zinc. We are super excited about this Sunawaya project, and we call it the whale. If you were to go down, you click on the same picture. So this is a huge project. You can see that the scale, Chris. We had almost a dozen people working at it, and you see the color, right? I mean, these are rocks were taken on like a 5 meter interval. I mean, these were taken tens of thousands of samples, of which of mapping, right? Observing. And so this is only half the deposit. Chris, we taken 900 samples, 86% had silver grays. And you can see the strike, Chris. I don't know if you can see the strike where there's all dotted. I mean, it's 8 kilometers, Chris. And we are drilling from the north to the south because south is a little bit lower altitude and it's being a rain season. So we started drilling on the Pujuni area in the north, and we're going to head down south. It's 15-hole program, over a 3-kilometer stretch. So, we're very ambitious. We're now there to proven and probable 3 million ounces. We are really out there to achieve our objective, which is 300 million ounces. And if we can achieve a drill hole, we have a very high confidence that this is going to be a good success. The reason is just 200 meters from the border is a project called Makukota, and it has 350 million ounces, Chris. And the map of the samples we've taken on surface, the rock looks identical, Chris. So when you have identical looking rocks, not only looking the same mineralization, that's bare silver on surface over 8-kilometer stretch, over 820 samples out of 900. And I think the first drill hole is going to really set a tone, Chris. And as I said already, the Elephant has adopted a very conservative approach. When we announce the news of a drilling, we already have something we really feel confident of impressing the market. And we've set the ground, the first hole in the ground. We've seen the core. And we're very excited about this project, Chris. I think it's going to be an absolute game changer. And in fact, same for Triunfo, of which we drilled last year, which we got 98 meters of 1.5 grand gold equivalent. Not to mention Pulo, that's a beast of itself. And then you added the nickel thing on top.
All righty. John, we have 2 final questions here, if I may. Anthony asks, has the mining sector adopted SAP as the main software for planning and management? Is that
Yes.
Yes. Okay.
Well, no. You're asking that's the question?
Yeah, someone was wondering about that.
You know what, Chris? My prior career was with PeopleSoft, in the enterprise software space in the late 90s. So we compete directly with SAP. I mean, that is too broad of a question. SAP, any from supply chain, Salesforce automation, customer service, accounting and invoicing, human resources. So you got to, I mean, it depends on where the application is used, and then how skilled you are and in that area. So I'm not really positioned to comment, but automation and software is good for the industry, especially for something in the mining industry where there's a lot of inertia to adopt new ideas. So it's always welcoming to see.
Well, I appreciate that. Thanks for answering Anthony's question there. Last one for today, and then we're going to wrap up. Dylan says, at $50 silver, would Silver Elephant consider selling to large cap miners?
Chris, I would just say, you know what? The answer is the answer is yes. The option is always on the table. But Chris, I will say this. I mean, when was the last time you set up a plan for the next 6 months and it turned out exactly you're supposed to go? Or even a year, like, Chris, it's like, yes, you should have a plan, but I think that plan should have some wiggle room, right? Like the movie Adjustment Bureau, I think we talked to you about. So I think at that time you asked me $50, I have to think, well, where is that price? Where is that silver headed in the near term, in the long term? If gold is at 5,000, I'll say, no way, I'm going to hold on, right? We talked about real estate prices. We talked about oil price. And we also talk about, there's also the XAU, the ratio of mining company versus the underlying silver prices, right? So sometimes equity is frothier than the underlying metals. Sometimes they are at a premium. Best example, we're trading same prices. I mean, look at how much silver junior has gone up and down, even though silver prices hasn't changed much. So I think there's a lot of factor at play. The valuation of juniors relative to silver price, the valuation of elephant relative to other juniors, the relative valuation of silver relative to other metals, and the outlook of the fiat currencies in general going forward. And then you add the politics on top of that. So I don't have an answer, Chris. But I would say $50 more likely than 25. That I know for sure.
Well, actually, I think that's a great answer. I mean, when we hear about people meditating or anything being present, the conditions change, whether it's a poker game. All right, you thought this, new information comes in. How do you factor that in? And I actually thought that was a great answer and puts things into perspective. So with that said, we are going to wrap up for today. Thank you to everyone who logged on. Thank you, John, for being here. And perhaps just wrapping up, you can tell folks the best way to reach you with questions or any further, how they can get further
Yes, Chris, make sure you sign on to Twitter, John Lee Silver Elephant Twitter. We've got hundreds up to approaching the century mark, partially thanks to Chris. I think there's a lot of useful information exchange. I share an unbiased view on the metals in the medium term and long term. And I think that's going to be beneficial for you to get a second opinion, not just from the perma silver bulls. And that's also where I spend all of my time answering shareholder questions. Highly encourage you guys to check it out. It's free. And then check our YouTube. We just did a presentation Zoom video, a 10-minute, talking about the nickel acquisition that we made and how this project is different from the other nickel projects. And always get with me on my email, the traditional way, jlee@silveraleph.com. Back to you, Chris.
All right. Well, thank you, John. Congratulations again on the news, and I appreciate you joining me. And we'll look forward to checking back in soon. I'm sure there will be no shortage of action in 2021, and everybody's quite interested in the silver price. And I'll look forward to catching up with you soon, John.
Thank you, Chris.
And we are clear.